Kim, great to see you. So, is it the right time to be getting in? I mean, I guess they've gone up so much. You're kicking yourself. You didn't buy them yesterday, naturally.
Maybe. You know, I think the thing is we're going to have a short-term rally here, obviously. I hope it lasts more than this morning. Put it this way.
Yeah.
But I think, they only spent $31 million, something like that, U.S. dollars on this on these shares that they bought yesterday. That's chicken feed. So I think it's a symbolic move.
Exactly, it's the message they're sending out. And just tell us what that message actually is.
The message is that even though you and I and the world already know that the central government of China is the major shareholder of the big four banks, this is the central government saying we support our big four banks.
And we'll do anything we don't.
We'll do anything. We'll do anything that's almost free to support the share price. And this is almost free. I think what you want to monitor is whether we have a rally that lasts more than a week. If it lasts more than a week, then we may see something interesting in the Chinese banks. After all, they're going to have very good third quarter results. That reports towards the end of October. And if we get sentiment moving in the right direction, then you can make some money. Okay,
it also helps these banks when they want to go into the market and actually raise money as well, doesn't it? I mean, that's one of the key reasons.
Yeah, it would. But you know that capital raising cycle's over.
Yeah.
So I don't think we're going to see that for another 12 to 15 months.
Mm-hmm. But do you also, I mean, of course, we've still got the bad debt situation with local authorities and the exposure these banks do have to that. Are you concerned about that?
You know, the thing is, I just got back from Europe and I talked to 30, 40, something like that, investors. And the most, comforting thing is that there wasn't anyone I spoke to who thought the wheels are going to come off the wagon in China. And that's the correct view. The wheels are not going to come off. Even though we've had some pretty scary stories this summer, I don't think the reality is there. China has credit concerns, not a credit problem.
Right, okay, well those concerns, and if we look at what's been happening with the equity market, it's been pricing in effectively a hard landing, and the R word being used even.
Yeah, I tell you, European investors, they take a look at this very seriously. They're at some remove. They have good perspective because they've got Greece in their backyard.
Yes.
And as far as they're concerned, the comparison is it's not too bad in China.
Okay, so what do you buy then in particular?
I have no buys on any bank stock because my view is for 6 months. And over the next 6 months, I think we're still in some pretty rocky territory. Let's put it this way. However, it's the big banks. I think Central Region, of course, they own the big banks, right? But I think you want to stick with the big banks. I've got a hold on CCB. I've got a hold on ICBC. What I really mean is that's not a disguised sell.
Yeah.
That means these are banks with real value, even at the current share price.
Okay, and of course it's something we're going to be, it's a long-term view you've got to take here, isn't it?
To some degree, yes.
Okay, so let's also just talk about how the noise coming out of China has changed over the last 2 or 3 months. Would you agree?
Yeah, that's right. I think the problem you've got is you've got a lot of people like myself, analysts, and with some pretty scary stories. I think
which is the most scary one you've heard?
9% NPL ratio within, who knows, 2 years, something like that. This is S&P's report in July. That cannot actually happen. The numbers won't work that way. And as we can see just this past week, I forget the name of the province, but there's a province where there is a debt problem indeed. It's coming to a head right now, and the government has decided to loosen the policy in that province to allow the banks to lend more money to increase the credit liquidity.
That's the thing, isn't it? There's a lot of bullets left, aren't there? China has kept them all, it seems.
Yeah, I think that's exactly right. So I would not bet against China. I would not underestimate China. But I wouldn't be buying any bank shares exactly today.